Hi, my name's Sim Judge and I'm the founder of LayerCover. So LayerCover is an insurance marketplace. It connects underwriters, people willing to provide cover, with policyholders, people looking to purchase protection. The type of protection we offer includes cover against stablecoin depegs and also smart contract exploits. So in this video today, I'm going to walk through how a user supplies the liquidity on the platform, how to purchase cover, and also how to make a claim. So without further ado, let's look at how to provide liquidity. The first step is to decide which syndicate to deposit into. A syndicate is quite like a risk curator. Their responsibility is to decide which protocols or risks to provide cover for. As we can see, that each syndicate can specify a minimum lock duration. That's an amount of time that you've got to lock up your capital for. And we can also see how much leverage each syndicate is taking on. Obviously, the higher the leverage ratio, the more yield that syndicate will earn, but also the higher the risk. So if we click through, we can see the total deposits, the market exposure, that's simply the risk that this syndicate is exposed to, and the allocations history. We can also see some additional details here. Past activity and positions will show up here. So let's go ahead and deposit $1,000 into this syndicate. Now we can see we've deposited $1,000 for 234 days, earning 4.5% APY. This return comes from both the underlying yield earned by the assets held by Clearstar and also the premium income from the risks it's underwriting. Next up, let's look at how to purchase cover. On the markets page, we can see a list of all the different products we can buy cover for, from stablecoin depegs to vault cover to ecosystem-wide risks. Ecosystem-wide risks use UMA's optimistic oracle to determine payouts, while vault cover and stablecoin cover are fully deterministic and the claims process is managed entirely on-chain. These claims processes work by swapping the distressed asset, e.g. the Depeg stablecoin or the impaired vault shares, with the underwriter's USDC. So today we're going to buy cover for FRAX. Here on the FRAX dashboard, we can see the order book. These are all the quotes offered by the different syndicates, ordered from best to worst. We can also see the capacity, aka the total amount of cover being sold right now for this pool, the best quote available, and the total active cover. Here we can see some more cover details and some FAQs for policyholders. Let's go ahead and buy $1,000 worth of protection. We can see the total premium we'll pay, the duration, the start date, the expiry date, and the syndicate that will actually provide cover for this position. On the My Cover tab, we can see our active policy, the premium we're paying, the start date, the expiry date, and also a full insurance slip. Each insurance policy is represented as an NFT on the blockchain. We can also cancel our coverage early for a partial reimbursement. Before we go ahead and make a claim, let's take a quick look at the dashboard. On the dashboard, we can see active cover and also the syndicates that we have deposited into. Let's make a claim. To make a claim, I'll need to hand over my 1,000 depegged FRAX tokens, and in exchange, I'll receive 1,000 USDC from the underwriters minus the $40 claim fee. The same process works for vault shares. You simply hand over your impaired vault shares to the underwriter and also receive USDC fully deterministically. Let's go ahead and make a claim. Perfect. We can see our new wallet balance. with an additional 960 USDC. And that's it for today's video. Thank you very much for watching and see you in the next one.